What's up everybody? Welcome to the Stocks channel. My name is Cory, and today in the stock market we could see the bulls holding on for dear life at critical support, and we did see a lot of doji candles across the market today. So first up, let's take a look at the SP500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today SPY was down 0.17%, and we can see SPY did get the second day closing below the 20 daily moving average, and we are sitting right here at this critical support, which is right around SPY 393. This is relatively bounce or die support for the bulls, meaning if the bulls do not start to bounce immediately from this support zone, we are going to see support lost and a quick flush down to fill the gap at 381. Now keep in mind the Bollinger Bands are starting to contract, and the lower Bollinger Band is preventing that gap from filling easily. So there will likely be plenty more sideways price action and volatility until that gap fills. So I don't necessarily think we're going down there in a straight line. We are more than likely going to get some kind of retest of resistance before we get that next leg lower. So I always caution you, try not to be bearish at support. If you want to be bearish, then just wait for price action to break below support, and that'll give you confirmation we're getting ready for that next leg lower. But I would not be surprised in the slightest if in the short term we need to go a little bit higher before we go any lower. So do keep that in mind. We are at very strong support, and the bears did fail to break down through that support today, and we did have a very low volume day, so we're not getting that high volume selling at support. Now obviously anything is possible, so be prepared for any scenario and watch that critical resistance to the upside on the breakdown below about 399 to 400, and the negatively sloping 200 daily moving average is now at 403. On the Nasdaq 100 triple Qs, we were down 0.41% with a perfect doji candle just below this support at 282, and this is going to look like a double top rejection from 293 as soon as we break down below the neckline at 280. You can see the bulls defended that neckline today because they know this is a bounce or die situation. So going into tomorrow, one of the best support levels to pay attention to is going to be the triple Qs at 280. Below 280, the bears want to push down to fill the gap at 268, and that will be a double top rejection from 293, which should easily go down there to fill the gap, and that will be the price target to the downside. Now the bulls need to get back over resistance at 282 and try to break back over this other resistance at 288. Otherwise, this is going to be another bounce or die situation. So even in the event we get a bounce, it could still be to a lower high. We could get rejected from resistance and then go fill that gap at a later date. Now also note the Bollinger Bands are squeezing, and the gap is currently outside the lower Bollinger Band. So I would not be surprised if we bounce before we go any lower. So do keep that in mind. On the Dow Jones DIA ETF, we went absolutely nowhere today, only going down 0.01%, but more importantly, we could see the bulls failed to break above the resistance at 337, and we are well on our way to closing the gap at 331, which is well within the Bollinger Bands. So I continue to expect by the middle of December for the Dow Jones to come down here and close this gap at 331. The upside resistance remains 337, 339, and 342. And if we continue lower below the gap fill, we will be looking for the next strong support down here right around 325. On the Russell 2000 IWM ETF, we were down 0.29%, and we did get second day of confirmation that this was a double top, which very likely means IWM is coming down here to fill this gap at 178, and then more than likely coming back down to retest support at 174 to 176. That will be outside the lower Bollinger Band, so we may need to bounce and retest that resistance at the neckline of the breakdown at 182. So this is another example that we could be going higher in the short term before we go any lower. However, this is obviously a very bearish double top rejection, so do stay cautious and respect that critical resistance at 182 and 184. On the ARKK ETF, we were down 0.78% today, and ARKK finally fully closed the gap at 34, so that gap is now officially closed. But we do have another bearish pattern here with another lower low on the daily chart on that breakdown below 35, which very likely means we're coming back down to retest low at 32.5. Below that, we could come all the way down to a new lower low at 30, so stay risk off and be bearish on the ARK ETF while it's sitting below 36.5 and a negatively sloping 50 EMA. On the VIX, we were up 2.3% today, and the VIX did get a daily close above the 20 daily moving average, as we are seeing that sharp spike in the VIX from that support zone, which was down here right around VIX levels of 20, and this is exactly what we expected to see because we are in a bear market. Remember, when the VIX gets down below 20, that is more synonymous with a bull market behavior with low fear, and this is clearly not a bull market while we are still in this negatively sloping downtrend and at critical bear market resistance. So respect the fact that when the VIX gets low, the bears are going to step in, and that is exactly what we're seeing. And right now, the next resistance in the VIX is expected to be up here right around 24. On Bitcoin, we're currently down 1.52% as Bitcoin is testing the 20 daily simple moving average as support, which is sitting there at 16,645. Below that, we come back down to retest 16,000, and below 16,000, we go to the next price target at lower 14,395. The bull breakout is not until we get above 17,550, and then if we get the bull breakout, we should see a run up to 19,000. On Amazon, we were up 0.24% today, and we are seeing a rejection from the gap fill of resistance, which is right there around $90. And from that rejection, we could retest the 52-week low at 86. Anytime you retest the low, there is the possibility it could be a double bottom, and we could see a sharp reversal off the low. But I do think while we are in this bear market, there is a higher probability chance we slice through it and go down to that next price target at 77. So watch that level at 86 very closely in Amazon, because that is going to tell you whether we bounce or die. And that is the critical support or resistance as a bear or a bull. So be patient and wait to see what Amazon does at 86. On Microsoft stock, we were down 0.31% today, and we got the second day in a row closing below the support trend line. But the price action is still above the 50 EMA and trying to stay above a rising 20 daily simple moving average. So for that reason, it's not a great time to be bearish right here at support. Wait for the break of support at 242 to 240, and then you have a nice short trade in Microsoft that could take you all the way down to fill the gap at 228. The upside resistance levels will be right around 248 to 252, and you need to stay risk off while we are below this resistance, because we do have a very obvious gap to fill to the downside, and we are losing the support trend line. On Nvidia stock, we were up 0.83% as Nvidia came back down towards that critical support at 156 and found buyers at that level yet again and closed back over the rising 20 daily simple moving average. So it's too soon to say that Nvidia is getting ready to roll over and die. The rollover and die in Nvidia will be on a breakdown below 156, and then we should very easily go down to fill the gap at 142. But so far we continue to find buyers at that level, so look for the upside resistance around 166 to 172. On Tesla, we were down 3.21% today as Tesla is getting very close to filling that gap at 171, and we did form another daily closing low, so we are definitely still trending lower. Once that gap fills, we could continue lower to retest the daily low, which is down here right around 167, and below 167 we could make brand new 52-week lows that could take us all the way down to 155. Now, one thing to note on Tesla is that this does look like a double top rejection if we do start to break down to new 52-week lows. So this is obviously a very bearish pattern that has not yet confirmed, but will confirm on the breakdown below 167. So if you're still getting bullish on Tesla, you need to be aware that this is a bearish pattern setting up that's very close to confirming. So be cautious. If you continue to buy the dip, you are going to continue to regret buying the dip because you're going against the very strong downtrend. The critical upside resistance is going to be up here right around 185 to 197. And we are not getting bullish until we clear all of that resistance, and then we could start expecting more upside. On Apple stock, we were down 1.38% as Apple did make another daily low intraday, but so far bounced up and still holding right around this support right around 141. However, there is a very obvious elephant in the room, which is this gap fill at 138, and we are getting extremely close to filling that gap, and that is exactly where the bears are trying to get Apple to. Below the gap fill, we could come back down to retest support at 135 and fill the gap at 133. So there is still plenty of room to the downside while we're below the resistance trendline and critical resistance at 146. On financials, we were down 0.37% with another ugly rejection from this negatively sloping 5 EMA and getting very close to fully closing the gap at 34.35. The industrials were down 0.13%, closing below the 20 daily simple moving average for the second day in a row. So it does look like we're getting ready to roll over and come down here to close the gap at 97. The healthcare sector was up 0.82% today, still looking bullish, closing above all of the moving averages and still on a strong bull trend, so you can continue to stay bullish in healthcare. The energy sector was down 0.23% today, closing outside the lower Bollinger Band for the third day in a row and getting very close to our support at 84. So I do think it's likely that from this support we are going to get a short-term bounce before we see any lower prices, but the risk is still to the downside while we're below all of these negatively sloping moving averages. So jumping back over to the SP 500, we are still at bounce or die support, and I never suggest getting overly bearish while we are at support. So wait for the confirmation of the break below support, and then you can get more bearish for the gap fills below. Remember, you need to respect both sides of the trade and you need to understand both scenarios, and then you are going to let the price action tell you which scenario you should be trading. That is the only way to be unbiased and a price action trader, so let the price action do all of the talking and have a trade plan that is ready for either scenario. Also, don't forget that I have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETFs TQQQ and SQQQ and sends you all of your buy and sell alerts directly via email and text message. You can learn more about Bank Trade Alerts or learn how to subscribe by clicking on the link in the description of this video. If you're looking to become a better price action trader, come join us at the Stocks Channel Trading Discord community where you get access to all of my intraday updates and analysis. You can find out how to join the Stocks Channel Discord by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.